Greetings, members one and all of the Salivation Nation. Will silver outperform gold in 2019? According to this article from Kitco News and some analysts at TD Securities, they think that will be the case. Silver's time will come, they say. They see silver outperforming gold next year. Silver's not been the shining metal that TD Securities was expecting it to be in 2018, but the firm is not giving up on the precious metals analysts see it outperforming gold in 2019. So take that for a grain of salt. So apparently they thought it was going to do better than it did this year. In an interview with Kitco News during the London Bullion Market Association's 2018 conference, Robert Malik, head of commodity strategy at TDS, said there have been several factors conspiring against the entire precious metal sector, such as rising interest rates, a strong U.S. dollar, and a weaker yuan. For silver specifically, Malik added that the metal was further weighed down by the concerns that the global economy will be hurt because of a worldwide trade war. You know, you would think it would be the other way around, that the prices would go up because of the threat of a trade war. Right now, we think the market is underpricing silver's potential, he said. And I wonder if he's alluding to maybe manipulation there as well. Malik added that while the trade war between the China and U.S. can still get ugly, his firm still sees positive economic growth next year, which should support silver prices, boosting the metal's industrial demand. And so that's just it. They're seeing it more as a commodity and being used in that. Of course, a lot of that we have to see about supply because there is somewhat of a deficit in silver. But will that have a play, especially if things pick up with the economy? He goes on to say that we don't see global economy collapsing next year. We see the global economy growing 3.5%, and that should lead to higher demand for silver, he said. You can't get too negative on silver when you see higher demand and flat primary supplies. We are certainly not seeing new silver production or infrastructure coming online anytime soon. Malik said that TDS sees silver prices pushing to $17 an ounce by the end of the year, representing a gain of 15.5% from current prices. December silver futures last traded at $14.70 an ounce, $14.70 an ounce, up more than 2% on the day. Meanwhile, the Canadian Bank sees gold prices ending next year at $1,325 an ounce, a gain of 7.5% from current prices. December gold futures last traded at $1,232.90 an ounce, up nearly 1.5% on the day. Now, I will go back and say he says that he doesn't not seeing any new silver production or infrastructure coming online anytime soon. But keep in mind that silver is typically mined as a byproduct of other metals. So if there's gold production or silver there, you may an increase in gold production, as I've outlined in past videos, then you will probably see more silver come online as well, even with current systems, but even with new mines, depending on where those mines are. Malik's comments come as gold continues to outperform silver, with the gold-silver ratio holding near its highest level in more than a decade. However, the gray metal appears to be building some momentum. I don't know why they call it the gray metal. Gray indicates dullness. It's anything but dull, seeing its best day in nearly 2 years. Malik says that a rally in gold prices should also support silver, which has doubled volatility compared to the yellow metal. I agree with that. He added that TDS is optimistic about gold as equity markets fell into correction territory last month, losing almost 7%. The balance of risk is that the equities will continue to go lower as they have gone higher in such a long time, he said. That is helpful for the precious metals complex. Weaker equities should galvanize portfolio managers to reweigh their exposure to gold and silver. Indeed. Well, and I agree with part of this. I do believe there's definitely a lot more room for silver to go especially considering that we're seeing near record gold silver ratio. But it's a different world, it's a different economy now than it was really even 10 years ago, with in terms of silver's use in industry and its demand in that aspect. And we've seen a lot of people felt like they got burned on silver in 2011 when the prices reached so high and they lost a lot of money, uh, and they sold when it really started to go back down. And but a lot of that is understanding the markets, understanding what that was in 2011. It was a lot of us learned a valuable lesson when the prices went so high during that time period. So silver is a metal that it's a unique metal and is so versatile in its usage, because of the properties of the metal. And so, with that being said, there's a lot more incentive to acquire more of it to be used in those areas. But as you know, uh, there's no shortage, at least for us that are wanting to accumulate it to preserve our wealth, or as collectors, you can go online anywhere and pick some up. And but you know that and that's the thing. Other people are reporting that the local coin shops are having a shortage. There's not as much coming around there, but that's because local coin shops almost always get it on the secondary market, and they also are leery of holding up some of these collectible coins that they're not sure paying extra premiums for, where they can buy, unless they buy it from an online dealer, and even as such, will they be able to sell it? Because if they buy from an online dealer, more likely people that come into their shop that are looking for that kind of thing will probably just buy it online. Whereas some of the classic coins and the constitutional silver and the like, those that stuff, is probably harder to keep in stock. But quite interesting and fascinating indeed. Um, it's a new situation. I don't think we're going to see the gold to silver ratio get back to where it once was. Certainly not to the natural ratio or the price ratio that we had thought that would be more realistic. Some people believe that to be anywhere between 15, 20 to 1, or to its mineable ratio, what it's being pulled out of the ground at, or its rarity, of closer to 10 or 9 ounces of silver to 1 ounce of gold. And if that's the case, then that means that, you know, um, we would be lucky to see it get to 50 to 1 at this point. My view is I think it should be somewhere around 50 to 40 to 1, or even 30 to 1, considering the situations, but it just may not get there. The longer it stays out, the gold to silver ratio, the more likely it is to reach that new norm. And that new norm may be somewhere in the high 70s or low 60s, or anywhere between the low 60s and high 70s. But even as such, I do think it is unusual, the unusual between the spread between the two metals, and which means that silver does, given its nature as being a more volatile asset and commodity, looking at it strictly as a commodity, it is more volatile, which means that it's got a lot of room to move up, which means that I don't think it's going to go down anymore, which means that at any point now, it's a bargain to pick up an ounce of silver. And I believe it's a bargain under $20 an ounce. Will we see that $20 anytime soon? Probably not. Even this article contends that it's not going to get to above $17 next year. But that gain to get up to that point would mean that I might tighten that ratio somewhat. But even this is a pretty conservative estimate that ratio won't be tightened up by that much next year. So something to consider here. What do you think? Do you think this is a pretty tepid response to where the performance will be next year for silver in comparison to gold? Or do you think it's going to go up even more? Do you think that ratio will ever get below 50 to 1? Even though we all agree we should tighten up by that much, if not more? Or do you think we're in the new normal territory of these high 70s, low 80s to 1, or that we will never see the ratios that we once were familiar. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, comment, and subscribe.